So, hello buddies, hope all of you doing well. We're going to see another important topic, that is model tax convention. Most of the candidates do tend to skip these topics, but keep in mind these are the real scoring topics. There are two ways of reaching the target in DT. One, to focus on all the tricky things. Another thing is securing marks on this minute aspect. So let's quickly check them out. What are the few things you should keep in mind? First one is Article 20, that is the income from automated digital services. So the key thing you should keep in mind in this is, we are using various online media, for example Flipkart, Amazon, all those things. So that is the main reason this article came into the picture. So there is no corresponding article in the OECD model. So what are the definition is any services provided on the internet or another electronic network requiring minimum human intervention from the service provider. So what are various services covered are online digital services, supply of user data, online engine services, social media platforms, and digital content services. So another thing is, if the beneficial owner of the income is a resident of resident state, the tax charged by the source state cannot exceed the specific percentage of the gross amount of payments. These are the minute things you should keep in mind. If you do this, then you will be surely pocketing marks in these things, because many won't be answering, or many this question usually comes in question 6, so candidates tend to leave a choice. So if you write it, then you may catch the attention of the examiner as well. Another very important thing you should keep in mind in Article 25 is the difference between OECD model and the UN model convention. Article 25b, that is in case of arbitration, if the authorities are unable to reach a consensus within 3 years, then UN model they can proceed to the arbitration. And in Article 25, the time limit of 2 years from the date of all information by competence order to address. So that in UN model is 3 years, in OECD it is 2 years. And next is UN model, it states that arbitration must be requested by the compete authority of one of the contracting states, whereas in case of OECD, arbitration must be requested by the person who initiated the case. So this is the thing you should keep in mind. In Article 2 UN model, it says competent authorities they can depart within 6 months after the decision has been communicated to them. So this is another very important clause. All you got to remember is 3 years, 2 years, and 6 months. That's it. You'll be good to go. So moving on to the last thing, that is exchange of information in Article 26. So it provides for the information to may be exchanged in a manner in which information has to be made. For example, a lot of big shots, fugitive offenders left India, will be very aware. And so the key thing you should keep in mind is Article 26 is it facilitates effective exchange of information between contracting states. CS, as it's popularly called, is contracting state, and it curtails cross-border tax avoidance and evasion. Then it curtails capital flight that is often accomplished through tax evasion avoidance. Hope all of you found the discussion useful. Do subscribe, do make use of it. Do watch all the videos that is best features, and keep going, and all the very best.